Radisson Mining Resources doubled its resource estimate. With us is Michael Gentile. He is director and the largest single shareholder at Radisson. Michael, welcome back to Kitco.
Great to see you, Michael.
Radisson is ticker RDS on the Venture Exchange. Michael, I want to talk about that resource estimate in a minute, but maybe first you can talk about the former O'Brien mine. What is it and why you focused on it?
Yeah, originally attracted me to my first investment in the company was we're exploring for gold next to the highest grade gold mine in Quebec history. The old O'Brien mine produced about 600,000 ounces at 15 grams a ton head grade. So the highest grade gold mine ever producing in Quebec history. So the best place to find high grade gold, as you know, Michael, is right next to high grade gold. And this was a dramatically underexplored property, which we felt had a lot of potential. And obviously the exploration we've done in the last several years has borne that out, that we continue to find very, very high grade in and around the old O'Brien mine. There's a lot of green, a lot of blue sky and open space to drill further in this property as well.
Now, I think you made mention of that grade in your resource estimate that you released early this March. What were some of the highlights?
Yeah, so the resource grade and the scale are quite unique in North America, Michael. We are about 1 million ounces of gold at north or 10 grams per ton grade. So to my understanding, it's one of the highest grade undeveloped gold deposits with 1 million plus ounces in North America, not owned by a major. We're in pretty rarefied air in that category. I think the only company that I know of that has that kind of grade and 1 million plus ounces in North America is Osisko Mining. Your viewers probably know that story very well. It's about north of 5 million ounces, larger than us, but that's got $1 billion plus market cap. So we're definitely in rarefied air and in a very valuable territory in a fantastic jurisdiction, as you know as well in Quebec. It's a great place to mine.
We'll talk about that jurisdiction, but maybe a little bit more about the geology, where you're situated and what the trend is.
Yeah, we're on the Larder Lake Cadillac Fault, which is a very prolific fault in Quebec. It's produced over 25 million ounces of actual gold production in the last 100 years. Some of the biggest mines in Canada are along that fault. Agnico's got a couple of mines. LaRonde is one of them on that trend. There's El Dorado. There's Yamana was there until they got bought up by Agnico recently. We've got IM Gold. You got a lot of major mining companies on this fault. It's a very, very prolific region with fantastic resources, fantastic expertise, ease to work, mining camps and cities to live in instead of mining camps. So your costs are much lower. It's a fantastic place to work and continues to yield impressive results. New discoveries seems to be every 3-4 years. There's a brand new discovery or increasing size of discoveries in the area. So it's got a lot more to give as well. So it's a very well situated project, in my opinion.
Talk about your infrastructure around Radisson, Michael.
Radisson, our O'Brien mine, literally, you can go to Tim Hortons, have a hot coffee, and get to the mine site. It's still hot in your hand off the highway. So we're really, really well located. Some of these projects, they got great geology, but you're in the middle of nowhere, helicopter supported. Nearest road is 200 kilometers away. This is extremely well situated. The whole highway was built in this mining district for the mines in the area. So the infrastructure was literally built around the mining, not the other way around. And so we think that it's a fantastic advantage that shows up on our drill costs that are industry low drill costs per meter, assay turnaround times, being able to attract high quality talent, which is another hurdle in the industry these days. People want to live and go home at night and sleep in comfort and in their homes with their families, and that's what you can do in this region as well compared to other mining areas. So the infrastructure is absolutely fantastic. There are 6 operating mills already within 75 kilometers of the O'Brien deposit. Agnico owns one of them, and several other major mining companies own others. And therefore, you got hungry mills that are constantly looking for feed, and being the highest grade, ore in the camp has a distinct advantage that theoretically means you'd want to be in the mills sooner rather than later. If you're a mining company, you could replace their low grade feed with our high grade ore and make a lot more money. So not only is there great infrastructure and workforce, but also there's 6 mills, which dramatically reduces your capex and your cost to develop these ounces in the future, having infrastructure already in place.
So this is a community that understands mining, Michael.
Correct. This community has been, the whole towns were built around mining. So, if there's someone in a town that doesn't have someone who works in the mining business, I'd be surprised. And so they're very supportive. Obviously, Quebec has the right balance between environmental stewardship and understanding the value of mining economically to the province. And so we have, best in class environmental standards, ESG protocols, but you've got a very experienced workforce and you have a population that you don't have to educate on the benefits of mining because the town has been enriched and benefit from mining for over 100 years.
Now, you said at the top you're the single largest individual shareholder. Maybe talk a little bit about the share structure at Radisson.
Yeah, very nice, clean structure. We have about 285 million shares outstanding today. Our stock price is around 20 cents, about a $50 to $60 million market cap. Tightly held, got a couple of corporate owners that are in that 5 to 10% range. I think I own 7 or 8% of the company myself. A lot of local high net worth investors that own 3, 4, 5, 6% of the company. So relatively tightly held, very supportive, sticky, long-term shareholders. When you juxtapose a $50 to $60 million Canadian market cap versus a million plus ounces at 10 grams gold, it shows you how dislocated the market is in terms of valuation and apathy in the market today. And when you layer on potentially $2,000 gold prices, you really start to see the value proposition quite clearly here, at least in my opinion. So we got a good group of shareholders, supportive, tight list of shareholders. We're patiently waiting for the retail market to wake up to the value that could be had in the gold sector. And with $2,000 gold, we're hoping that's sooner rather than later. But the company is very well positioned with supportive shareholders and a smart board and management team that knows how to create value going forward.
Let's talk about that current environment for the precious metal space. Agnico Eagle, which is, I guess it's the 300-pound gorilla that's in the Quebec space as well, did that nice big deal for Mayon dining up Canadian Malartic. There looks like there's been some M&A in the space there, Michael.
Absolutely. I think there's more to come. You're going to see, Michael, I mean, these senior gold mining companies at current gold prices are going to be minting money, generating a tremendous amount of free cash flow. If you look back in 2015, the balance sheets of most of the major mining companies were upside down. I mean, Barrick was in financial distress. Freeport was in financial distress. Those companies paid off all their debt. They're now generating significant free cash flow. They're paying dividends. They're buying back stock. But as you know, Michael, this business is a depleting asset. So when you build a mine, every year you mine, you're losing ounces, and they're very hard to replace. So at some point, the major mining companies, Agnico's been very smart about acquisitions and so securing the future, but you've got to secure your 10, 20-year future with additional discoveries or acquisitions. And the major mining companies have been spending very, very little on exploration the last 10 or 15 years. So in my cursory view of the major mining companies, their exploration cupboards are pretty bare because the last 10 years they've been focused on paying down debt and cleaning up their balance sheets and returning capital to shareholders. But they are absolutely going to need to pivot in the years to come and look at growth and maintaining their production profiles. And the only way you do that is either find it, which takes decades in some cases to find resources of size, or acquire it. So I think you're going to see more and more M&A, seniors buying juniors. And I also think you're going to see more consolidation in the junior space because juniors are having a harder and harder time financing themselves. There's too many small companies running around the junior sector, as your viewers probably know. And so rational consolidation in mining camps where you put 2 or 3 juniors together, get the scale and the capital markets profile necessary to move your projects forward is also something I'm very fixated on in a lot of the juniors I'm involved in. And investors in capital markets are asking me and others for that as well. So I think you're going to see quite a busy M&A year in the next couple of years ahead.
Are we still also seeing the pivot to first-tier mining jurisdictions, Michael? Maybe also talk a little bit about what's happening with Quebec in terms of lower carbon output.
Yeah, it's a very good point. I think the gold price, typically when it starts to make new highs, it is signaling a bit of distress in global markets, at least financially. But financial distress in global markets often spreads to geopolitical distress. And you're seeing that in increasing conflict worldwide. The obvious one is the war in Ukraine. But also you're going to see more distress in emerging countries as they face inflation and face devaluation of currencies and harder time to feed their populations. And so you're going to see tier 2 and tier 3 mining jurisdictions get harder and harder to operate in. And that's going to increase the value of tier 1 jurisdictions like Quebec. And like I said earlier, Quebec is doing a very good job about making sure they're doing responsible development, consultation with First Nations, consultations on environmental standards and protocols, and making sure the ounces are produced in a safe and responsible way, but at the same time not putting in place overly restrictive, cumbersome blockages, which take 10, 15 years to permit a mine. That drives away capital and basically ensures you're never going to have a mine built in your jurisdiction. So Quebec has really understood, I think, very well the nature of how to have a safe and responsible and a successful mining industry. And there's fewer and fewer countries that have those attributes. And so the sandbox for safe, educated workforce availability, locations where you can get things done in a safe and effective manner are dwindling by the day. And that dramatically increases the value of the deposits that are located in those jurisdictions like Quebec.
Michael, let's finish with Radisson. What are some catalysts over the next 12 months?
Yeah, obviously the resource was a major catalyst, Michael. The feedback we got in the past was you got very high grade. Our last resource was 450,000 ounces, so we've more than doubled the last resource. So now we have high grade, and now we have the scale. And we're already seeing the interest level from corporates and institutional investors pick up dramatically as they now sort of see the pathway to an economic mine, not just an attractive geological target with some good grade and potential scale. When you cross that 1 million ounce threshold, you start to talk about a mine, and at 10 grams a ton, the economics become quite clear that you can make money mining this in the future. For me, the biggest catalyst, if your investors go to our corporate presentation, you can see the cross-section. The 1 million ounces that we have today has only covered a very small portion of our 5.2 kilometer strike. We control 5.2 kilometers along that Cadillac Lauder Fault that has produced 25 million ounces in history. And we see easily room for a double or triple or more of those ounces in the ground with additional drilling. So we think we're far from done here. Additional drilling will be a major catalyst for shareholders. And like I said, crossing that 1 million ounce threshold psychologically has changed the nature of the discussions we're having and the interest that we're seeing in the company. So I think it should be easier going forward to raise capital and to attract investor interest in the company going forward.
Michael, thanks for your time.
My pleasure. Good to see you again.
My name's Michael McCrae. You're watching Kitco Mining.